We pay for life insurance because we want to protect our family's financial security. We pay for life insurance to provide them with tax-free money, to pay off home mortgages, auto loans, and credit cards, as well as to replace the monthly income they would lose if we are no longer here. But our need for life insurance will change throughout our lives. Sometimes we need more coverage, and sometimes we need less. We usually need more as long as our children are in school and entirely dependent on us financially. And we typically need less when our children are grown, out of school, and on their own. Probably just enough to pay off our home mortgage, car loans, and credit cards until we can afford to quit working and we retire on the income from our savings and investments. But we will always need at least some coverage, even after we retire, if only to pay for our end-of-life expenses, like home nursing or hospice care, and funeral or memorial services. However, with term life insurance, renewal rates begin to escalate and become very expensive in our 50s and 60s. And somewhere between 75 and 85, term coverage finally expires and is no longer renewable at any rate. So how can we keep our life insurance for the rest of our lives, adjust the coverage as our needs change, and keep the cost affordable, even into our retirement? With a flexible and adjustable type of coverage known as universal life insurance. Universal life insurance allows us to adjust our coverage, increase it or decrease it to match any changes in our financial obligations and liabilities. With universal life insurance, we can also adjust our payments too. We can lower or even skip payments in some years. We also have the option to prepay or pay off our coverage at a discount, or we can simply schedule a low-level payment plan that is much less than the total cost of term coverage. And we can keep the coverage for as long as we live, even if we live to 120. What's more, some universal life insurance will allow us to take up to half of our coverage as a tax-free cash benefit while we are still living and use the money any way we want if we are diagnosed with a critical health condition like cancer, heart disease, stroke, or kidney failure, or we are given less than 24 months to live. Interested? Then talk with a financial security professional who asked you to watch this video.